crypto market's been dumping, stocks are volatile AF. We'll check in on the gold markets, and we'll be discussing the upcoming earnings call for LivePerson. Welcome to the Outcrop, everybody. Before we dive into all the chat for today, just wanted to give everybody watching a massive salute and say, the hard part's done now. The hard part is done, and we're on to the easy part. You might be thinking I'm talking about some crypto you've been holding for a long time that's been in a bear market and you've got through the hard part, or some stock that you've got that's got through the hard part, or anything investment-wise that you're talking about. And yeah, ultimately I am, but I'm talking about how you've made it this far in life, which in life everything seems to be out to get you. And you're doing a hell of a good job. Being here in this show now as an investor, trader, or someone who aspires to be an investor or trader, you are achieving something monumental by being here today, and your whole life is led up to this moment. And the hard part is done. All those eggs you've fried in life to give you sustenance, and all the ups and downs in the world has got you to here today. And welcome to the show, everybody. That was necessary to get that out there for people. You need to hear it from time to time. You need to hear it because it's important that you value yourself as an investor and a trader. The future is super bright, and it's great to be a part of it with everybody. I have a goal in the chat right now, which is great to see. Great that people are taking part. We're going to be talking, if we achieve that goal, which we look to be on the way to, what is my particular thing that I'm looking to in the LivePerson's earnings that are coming up. The sort of the thing that's going to stand out. So to me personally, it's not what you think as well, which is the fun part. This is the SPY chart that I have up beside me just here, and you'll have noticed that we had this trade set up, went wonderfully well. There were a couple of dodgy moments during it, but we never took out our 6.545 target, and it's nice having that on the chart, just as a reminder of the sort of an example of the type of thing that we do on the show here regularly. I think the 6.545 level on SPX remains important, and I want to just zoom on out and kind of think about, this is an uptrend, and during uptrends there will be ups and downs. We've had downs happening for like the last week. Could it be blow off toppy, with a kind of couple of gaps pushing up the way there? There's elements of that. It's not huge though, it doesn't really scream that. If there was a main thing to talk about, it's that right now they're in this world of indecision. And if I were to jump this up to like a weekly chart, then you'd see that there is this type of doji at the top here. This doji here, which signals indecision in markets. And go back to the daily time frame, you can see this indecision writ large on the daily time frame. A pump up, spent a whole day just trading in this isolated section of price on that one candle just there, and then pushed higher only for that to be sold into and come back and test these gaps again. Every time the prices have moved up into where the free space has been above, it has been pushed back down. Is there a threat that prices go on to test these lower levels? Absolutely there is, and there's indecision and hesitation in the markets. Things have been volatile. There's been a concentration towards the Mag 7 stocks. So unless you've just been invested in an index, which is so heavily dominated by the magnificent O's, then you've missed out on a lot of the positive part of markets this year. If you I've traded in just some handful of stocks that are good, solid stocks that could be doing better if conditions elsewhere were to align properly, then you've missed out. Whereas if you've been riding the waves of like Nvidia, where despite the fact that all the markets suffer whenever there's like tariff uncertainty. The tariff uncertainty is primarily directed towards Nvidia, but Nvidia has been pumping the whole time, and everybody else is like, oh, but my stocks and my cryptos and my whatever are suffering, unless you're invested in gold as well as the other thing. So right now, anyway, we've seen this over the last while, the last week, and it's worth pointing out that there's a degree of this scattered price action here, drawing an eye to it, and calling it what it is, that things have been volatile, and asking a question about, could this be quite bearish? And so far, reminding people then that while prices have traded up into these gaps, they haven't filled them, but they've tried to a couple of times. And that is showing that there is actually some bullishness that remains. There is some bullishness that remains in stock, but anything so far hasn't really amounted to huge correction status. However, if we take a jump over to NASDAQ, then you can see that there was this major kind of threat. This may be a cleaner and easier to see chart of the correction over the last, week. We have seen prices revert nearly 5%, right? And that would be corrective. It wouldn't be full bearish, but it would certainly be corrective. However, when we put this idea of a correction into context, right? And this is what I wanted to show people. You can see the kind of abusive relationship that traders have had with charts over the last while, with individual stocks not necessarily performing as well as the likes of the big players in the market that push these things higher. Of course, Mag 7 dominates the NASDAQ charts as well. And we can see, if I just take this measuring stick out, how several times we've had, so if I go back to the likes of early October, the Tuesday the 9th of October, saw this huge dump. You'll remember that if you're trading crypto as well, huger dumps, worse on crypto obviously. If we go back again to something like July, we can see that there was this other dumps, and the whole way along here we've seen periods of time when it's come in and people said, oh, there's a correction happening, as I'm trying to demonstrate by taking this magical measuring sort of yardstick that I've got and popping it on top here. And you hear people kind of, saying this is a correction, but it's all just forms part of where the downs are in this upward trend. And the fear, as there are highs up these highs up here, is born out of the lows that came in April and the large recovery that there's been since. If I draw a measure in percentage terms, that's the markets have moved up 60% since April. It leaves people feeling extremely nervous, really nervous, because they can't believe what they're seeing. And the backdrop to this, of course, has been like, how can this be? How can this be? 60% since April 2025, right? It's supposed to have to see this in my own portfolio, right? Is the question that a lot of people are asking on the in the world, not on the internet, just in investment places everywhere. I'm supposed to see this in my own portfolio, right? But it's not been happening, and every reversion to the mean is called a correction, is associated with market panic, and there has been a lot of stress. So I just try and get that updated there on my screen. Why is my Streamlabs not updated that picture? Oh, there you go. So that's the feeling that's been in that during that period, right? Good to recognize what's been going on there, because every reversion to the mean is being called a correction, or correcaton, as I incorrectly spelled it on that note there, and it's associated with market panic and severe stress. Now, you'll be struggling perhaps if you're like, oh yeah, that's just a correction to the mean, to understand that in terms of like what that's like for some other markets. And I think it's really easy to see if you just jump over to the Bitcoin chart here, and you can see huge moves up associated with huge moves down. So the latest was up here in the 9th of October. If you remember, I mentioned that day. And crypto markets hit 126k, right? 126k. Just mark that on there for you to see. That was there. And then, you know, by the time it got to midnight on October the 9th, we were here and the prices were 102k. So in the space of that one day, you saw a move down of 20%. I didn't really get the measurements to get that did I? But you saw a move down of 100, of a huge move down during that period of time. When, of course, you did see things like a correction in markets, but this is like a huge stress. And it's not just crypto, right? It's not just crypto. So you've got companies that are good companies, like well recognized good companies. Here's one of them, PayPal, right? PayPal, just to kind of put this a little bit into context, we can see that it had highs over here in October at $82, down here again to 65. Highs here in July of $80 and down here to 65 again afterwards. And yeah, this is volatile, and on the back of, you know, consistently good, strong performance from the company, and people understanding that it's transformed from a sort of growth company into one that just like pulls in tons of cash from the markets. Like, you know, if you were to check the headlines for PayPal and just look at the sort of thing that you're seeing here, like, will they be positive or negative? Let's just have a quick look. Trust Securities has increased its price target. Great, okay. PayPal Holdings executive sells shares. Well, we'll ignore that one, since you never know with those things, right? I've got them on the right now. So you've got like PayPal Holdings maintained at sell by Trust Securities. Oh, they still think it's a sell. That was, well, these are recent headlines, right? I'm trying to go back to the ones when it was highs to lows. Indian fintech firm Pine Labs eyes 2.9 billion valuation in reduced IPO, whatever that is. That's some spin-off thing. PayPal executives engage in stock transactions, whatever. Where's all the headlines? This is annoying, right? Because I don't usually get my headlines from here. There's been tons, right? Like AI agentic e-commerce platform partnership, PayPal Holdings, Wix partners with PayPal, right? So you've got like loads of great business stuff happening. PayPal to benefit from OpenAI partnership. You know, PayPal integrated into the OpenAI system for if you're like using the OpenAI web browser to like make purchases in line in your live chat. You can do it like through that with back-ended with PayPal system. I mean, there's loads of really good news here, like actual news. I mean, you look at like the data in terms of their earnings, you know, that's all like super solid. But what are you seeing in here instead is that the 2025 hasn't treated you very well as a stockholder in this company, which used to be like a big part of the of NASDAQ. I mean, there's other companies out there. Not looked at the Rocky chart in a while. How's it done? Oh, it's done okay since April. So this is one of these ones. It's gone from $50 to $116. Like, okay, Rocky. Well, that did the whole NASDAQ pump, whereas a lot of others didn't. Obviously, the sort of the source of all of this is Nvidia. And then if we zoom on in today and we see how, or this week, and we look at this chart, it's eerily reminiscent of the SPX and of the NASDAQ charts that I showed you before. When I say eerily, it's nearly 1-to-1. It's there's no point in splitting hairs about it. Yeah, we saw a huge move up in this candle, whereas on the NASDAQ futures chart there was or the SPX chart there was a smaller candle. Well, that's because this has got pre-market and post-market, as opposed to there you go, there's regular market hours, right? So they're pretty exact. So this is the situation. That's the situation with stocks. That's the situation where we are right now. Volatility in the air, confusion, and a lack of breadth in the market. Lack of breadth. A lot of the companies out there are not doing super well, while some in a contained smaller group are going well. And the markets mirror each other far too closely at times to be perfectly comfortable with. This is affecting crypto too, right? Crypto used to be like an adjacent market, next to all the other markets that isn't massively affected by the stock prices necessarily, because it's like seen as a counter bet, etc. But actually, over the time, when you look back in detail, it has mirrored the risk on and risk off appetite of the rest of the market for the most part. But it wasn't like it moved in lockstep. Then the ETFs came along, Bitcoin was traded in normie world, and the ETFs exposed it even more to the algorithms which trade based off of other charts. So if we go back to NASDAQ futures again here, by the way, if you're wondering what I'm doing right now, it's I'm bringing you up to speed on all the chaos in the world and showing you like where the situation is right now, pinning some things together so you can see some thing within the chaos. By the way, PayPal's a pretty good buy. I'm not a financial advisor. None of this is financial advice, but PayPal is one of those companies that I expect will get one of those big rises up. I know there's a Rocky Outcrop flash down there at about $50 or $30, is it? 35? I don't know. I'm just seeing good stuff really for that company, so I expect that to be a fairly decent bet. But is it acting, talking about bets, does it have a real direct beta correlation relationship with the main stock indexes? No, it doesn't. Is this problematic? Somewhat, because there's usually an equilibrium. But where does the equilibrium exist? Really strongly between key players of those stocks, like Nvidia, and the indexes towards crypto. Part of the reason for that relationship with crypto and these indexes is the institutionalized markets, the traditional markets, the ETFs and things that have been launched recently. And to see these things connected so closely together makes you wonder where price discovery is coming from on these companies or on these indexes or on these cryptos. If you trade crypto, you understand that altcoins have got a huge beta relationship with crypto. So if crypto moves down 5%, your altcoin might move down 20. If it moves up 5, your altcoin move up to 20. So the effect it has down tail is so much greater. So then when you discover then afterwards that the dominating price action on Bitcoin has been a copy of the NASDAQ, then you realize that the main driver in crypto sentiment isn't actually got its own hands on the steering wheel. The result of which is that your particular investment down the line is not trading off the back of its own fundamentals at all, which is an easy enough thing to say. Most things don't trade off the back of their own fundamentals most of the time, which is the key thing with fundamentals. But they're not trading off the back of their own technicals either. And there's a degree of a lack of volition among the market participants about what's really happening. And that's because, of course, it can't control and has got nothing to add to the narrative right now. Things are a little bit dead, not just in crypto, but across the board. And there's a tiny attention focus, amount of bandwidth that people have to consume information has been limited so much, and there's so much chaos and noise that it all focuses down to a very few sectors, companies that have any real price discovery, and everything else follows along with it, which is an unfortunate situation to be in. But it is because of conflicts with interest rates, like the government shutdown that's happening. Like welcome to America. We're the richest country in the world, and we shut down our government for over a month a year. What? What is that? What even is that? The longest one ever right now. So you have to deal with markets with all this noise in the background, and some of the noise in the background today. Like, let's just look at the big things over the last couple of weeks, right? You've got the big tech bubble, right, and the tumble that happened, and NASDAQ down, over a percent in a day, but like as I showed you on the charts, getting 5% regular, and it's just a reversion to the mean, creating a sort of domestic abuse relationship between investors and the chart, as every sort of move happens in the space of a couple of days and is often then bounced back up straight away. Crypto shock, happening right now. Bitcoin's going down to structural levels at 100,000, like massive liquidations. There's a particular altcoin, won't name it right now, that I was looking at, and it's and the funding rate on it went to 0.2%, right? Actually 0.27, nearly 0.3% funding rate on a crypto exchange, which is to say that there was so many more shorts on this crypto. The open interest on the short side was so great that for every 8 hours that a bear had their position open, they had to spend 0.3%, which adds up to 0.9% per day, which is, let's call it 1% a day. So if you had a position which was worth $100,000, then that position to hold cost you $1,000 a day on that crypto, because the open interest was so heavily to the short side. It's incredible. It's a massive, massive APR in percents. Massive, way bigger than anything that people in GameStop ever talked about with regards to their stock, right? Way, way, way bigger, about 10 times bigger than the borrowing rate has ever been on a stock, right? 10 times bigger than that. So why is that? And it's not because tons more bears entered the market necessarily. It's because so much of the bull side got liquidated. Of course, as well, that does add to the bearish aspect, but it wasn't fully driven down by the bearish thesis. It was driven down by a lack of fundamental buying power at the area of risk for the bulls. So the risk increased in the economy to the extent that NASDAQ, every time it has a little reversion to the mean, it does it in the space of a day and knocks 5% off. The greater beta aspect of crypto does a 20% move on the same day, which creates a 40 to 60% move on an altcoin. It's really all because of something like Nvidia dropping 0.5% at the very top end of the scale, and all the S rolls downhill. And it's got zero agency at any point in the string along there based on its own technicals, its own fundamentals for those different assets. Okay, so that's the situation that's happening, and you're amazing to be here at all, right? You're amazing to be here at all. You're a fantastic investor. It's not your fault. It's not your fault that the markets are not operating in the way that markets typically would when you've got a president known for, the economic aspect of the presidency. So your anticipation going into 2025 has not been met. And it feels really weird to look back at 2024 and think, wow, what a brilliant year 2024 was, right? Because that's totally wrong, because it was a crap year. But there you have it, right? There you have it. Other news, right? So you've got the so-called deal with China, but it's really just backtracking to where things were kind of a few weeks before, as we've seen with all these deals. Markets, Wall Street bank chiefs are warning that equities face a 10% correction, right? And when I say Wall Street bank chiefs, I'm talking about JP Morgan and Sachs, big names there's going to be a 10% correction. As I say, I show you the 5% corrections that happen every couple of weeks. So you're having a really abusive relationship where you've got the boss at the top shouting down at you, saying, you are going to correct 10%, right? Making you scared. And then a month goes by, and during that month, twice you'll correct 5%, and you'll be told you're not doing good enough. And it's quite abusive, right? So while it's in a bull trend, so it's like an unhealthy, unhappy bull trend, and it's not got breadth, right? It's not got the breadth. It's not got, everybody's not on board with the way that things are moving forwards. Advisors, right? Financial firms pivot from US large caps towards global small caps, emerging markets amid US stock caution, right? So as opposed to breadth, other stocks are seen as a safe haven They're not looking at bread. They're looking at a flight of capital away from Nvidia towards some crap foreign stock because they think, well, this might have a chance. That's not breadth, right? In Asia, you've got AI bubbles. Fear extends to chip makers over there in Japan, Korea, China. There's a, the equity correlation across the globe is becoming stronger. So this dynamic that I've expressed kind of linearly through US markets down to crypto also is expressed laterally with correlation between chip makers globally, which is obviously dominating all of their individual economies, and the same effect happens there. And again, it all ties back to the one market, so it's super centralized, the most centralized you've ever seen thing. Essentially, from a sort of Republican type of standpoint, which wouldn't believe in big government and centralization, would look towards kind of more individual autonomy for individuals. It doesn't stack up, which creates a emotional kind of dissonance amongst various people across the political spectrum, because that's a non-political comment. It's just to say that people in all walks of life are experiencing something very similar right now, and that there's definitely a degree of unity amongst everybody on the ground where we're like, things could definitely be better despite the fact that the headlines are showing something else. Dollar, right, it's been rallying against the euro. It's had its 3 strong days in a row, really kind of positive stuff for the dollar versus euro pound, kind of languishing a wee bit as well, looking like we might not have the idea of an interest rate cut coming up this week. The Bank of England has expectations have been slashed about that. They still think it'll get through, but we're going from like 75% down to 51% kind of confidence in terms of that happening, which is obviously to do with inflation costs and fears about things like the ability of the government to manage to manage things. Right now, what's happening is that the Labour government in the UK promised to not rise taxes, right? So inflation is still bad, but the Bank of England might cut rates because the Bank of England sees that the government is going to break its promise about income tax rises, and income tax rises should have the type of offset that you would get from having lower interest rates. So that's the biggest positive incentive for them to go ahead. The US, who are looking to make an interest rate decision next month, aren't getting any data because their government is literally shut down. It's like the Fed, who is not shut down because it's independent, not part of the government, is like, so government, can you give me some of your data? The government turns around and says, I'm sorry, but you'll have to phone back later. Nobody's in the office. We've been shut down. And it's been that way for over a month. And they have to make decisions. So what you see in the Fed right now is the biggest split there's ever been in the Fed history as to whether or not we should cut interest rates or not, despite all of the chat about it. So that's the backdrop to how you're supposed to be a successful investor. I mean, the fact of the matter is that you've made it to this channel right here, right now. You're doing a hell of a good job. So, I mean, what's the biggest news right now? What's the biggest news? Is the biggest news possibly that that New York has elected this is odd, right? Because these are normal words to talk about in the rest of the world. An example, Scotland, where I live, had a ruler, a president. We call it the first minister in Scotland. So our equivalent of a president in Scotland recently had family in Gaza, was Muslim, and is very much a social democratic person, because in the UK the right is far more left than in the US in terms of economics and so on. Now, in terms as well culturally, it's far less. I mean, America's very extreme. You don't necessarily realize this if you're living in America, but you're living in a very extreme country compared to most of the world. And one example of that is the way that there was so much fear about electing a Muslim to be in charge of New York because he was apparently a communist. Whereas if you were to be looking at it from a UK politician type of perspective, the guy comes across as an amateur. He doesn't really understand how it works. And Scotland, by the way, is very much a capitalist country. We invented capitalism in Scotland. It's a fact that Scotland invented capitalism because the human natural mode is capitalism. So if you're going to defeat that argument, you'd have to say it wasn't invented in Scotland, it's always existed. And you could see that around the world. Okay, sure. But if you want to put like a hard black and white line and say, this is when it was invented in Scotland, and it remains the policy in Scotland, right? So he's not a communist. This guy's not a communist, but there's so much fear out there. And the guy's an amateur. He's an amateur. Like the Scottish First Minister could have walked that election so easily because he actually knows what he's talking about, whereas the other guy's an amateur. And that's the situation you're in. So if you feel like you've been carpet bombed with news like those bunker buster bombs, with news that's kind of affecting markets ostensibly, but when you look at markets, you see a direct one-to-one correlation with a string of markets that go all the way back to just a couple of individual companies, and you think there's something kind of scammy going on, you are absolutely to be heard. That is a genuine feeling to have, and it makes a lot of sense. We've got absolute chaos in your ears that you have to deal with, and it's not easy for anybody out there. Just to put this into context as well, since people might be wondering, let's just bring up the Bitcoin chart. I'll do a quick bit of technical analysis over here on Bitcoin, by the way, while we're at it. I've got these big kind of colorful boxes on the chart, and they've been very, very useful. They get the key liquidity zones from the past, they see where the most likely areas is for a bounce, resistance, so on, and they work like zones. If you go to something like a 15-minute time frame chart, you can see the way that these things really do tell you where the next area of price movement's going to be to when you get into any in-between part. And then when you get into them itself, you can see where price speeds up and slows down, because that's where the area of liquidity is. That's why that's called those liquidity boxes, right? So that's the 2-for-1 explanation on that. And huge drop down here. This has been a very good recovery. A movement back down to this point is purely just going back down to test off of the 886, by the way. So there is like the could we have more of this schizophrenic market movement? Yeah, we could. The 886, by the way, of there's the 236 here on this Fibonacci pros around the world are like, Rocky, what are you talking about? It's not that way around. It's like actually, that's the kind of the point that I'm making, is that we came up towards that 886, tried it, bounced, came back down, actually tested 776. So anyway, this year's been pretty decent, and it's above those moving averages, etc. Technically doing okay. Is it massively exposed to huge shocks from elsewhere in the market? Absolutely. Key structural area at $100,000 needed to be tested properly. Go back up to the 24-hour time frame so you can see that, and make your own sort of assessment of it. This area needed to be tested properly. We'd had a broadening wedge which expanded up to the highs. This is the broadening wedge back in May 2025, when prices reached highs of 112, followed by lows of 98, and it oscillated between those before expanding towards the top side with a strong measured move off the back of that. And you can see here in effect. So the result of that being that it's left a degree of confusion. What would it be in a broadening structure? And it requires a fundamental retest of the liquidity at the lower areas of that. The next move down, if there is going to be one, the threat of it has to be drawn in with this other area. That's the sort of 96 down to 92k area. The volatility into there, I'd say, would be fairly large. This is not lined up as well as my other boxes on the chart. In fact, I'll just do that in my own time instead of messing things up for people who are looking at my boxes quite closely. But anyway, this is the current situation, and it's been okay. This recovery so far has been okay. You can often then look to try and get a movement up towards where the 1618 would have been of that, which is just, let me get that for you. You there, 109,000. In fact, if we landed on 109,000 and didn't make it into that red box up above, then what would you have, right? Let's draw it on with our brush. You'd have a movement that took you up towards here, and then perhaps did something like this, perhaps did something like that, and then did something like that. Now, if this was the next series of moves on the chart, with a move up towards the 1618 target off of that recovery so far, that would simply put it in a position where it's been trending down through that time there. So it's that target isn't enough to say there's been a proper kind of move towards the top side. However, what it really does do is it brings you into this zone, and this zone is a really distinct trading range, and anytime you make it into a zone like this, you do look to ask the question of, can you get at least 50% of the way into this? And you probably would. I'll just grab a 50%, rough 50% line using a fib tool here. That would be about 115 grand, right? Sound. So this would be the area. Where would that put you in for testing? It would be these highs here, this green box. So to be positive in this sense, we need to move up towards our first target of 109, and then 115, and then use the market structure here to show that we're actually basing out and can defeat these prior lower high areas, and then you'd be targeting up again higher. But that volatility and the tail and the beta there, so strong, right? So strong. The major news on this, by the way, check it out. What are you talking about? Oh. The major news on this, by the way, check it out, is of course that we could be in for a nice dump down in the Bitcoin dominance charts. This is the main area of the upward trend in Bitcoin dominance. These two spikes outside of it are, of course, aberrations. There's highly likely that it goes back in and tests off this range, perhaps testing the 50 simple during it. What does this create? It creates a pattern that I call a frozen boat. So if we just think about what a jetty would look like, if I've got a jetty, drawn this from above, and I've got a boat here, and I've got one of these wee things that that you tie a rope onto, attached to the boat. So from the side perspective, here's your boat, here's the water, here's the dock, here's the thing that the rope gets tied onto. It goes up onto the boat like this, and it creates a rope, and then it starts to rain in the world, and little icicles form onto this rope, and the icicles look like this, and they're quite small, and then as soon as any of them drop down past that area, the whole thing collapses. And this is what you have here, is a frozen rope, right? It's a frozen rope. It's a really tight range that if it pushes down below, it breaks. And this is where it gets really exciting, because if there is the structure at 100 grand for Bitcoin to really do actually find support, as I say, basically 100 grand is what Bitcoin should cost at minimum, is the kind of emotional sentiment in the world. If that existed, then you'd be looking and saying, well, hey, this is stay above 100 grand and get this dump down, and you get a reconciliation back towards something like 58% probably, which would see an impact in the altcoins, a huge one, huge impact in altcoins, bringing it back up to its own frozen rope territory, with a move up of about 50% in value for all of them, basically. So the fatigue in the markets has to come in, and we have to see Nasdaq stay strong and continue to do its abusive relationship thing, or Bitcoin start to decouple from the way that the Nasdaq chart is operated during its market hours when it's dumping, because Nasdaq dumps 5%, Bitcoin dumps 20%. And then it tries to reconcile outside when the markets are out of regular hours. So if I bring up the Nasdaq chart here, go with something like a 15-minute time frame, and what will I do here to show this? I'll just grab the candles. How do I grab the candles again? It's one of these. Bars pattern, right? It's bars pattern, isn't it? Stupid, but whatever. Here, copy, copy, and then go to Bitcoin. So I just wanted to show you the most accurate way for the benefit of the audience. Right. I'm not going to line them up exactly on top of each other 100%, but you can see the effect here. Now you'll be asking, why did the market decouple in this area? Why was it more extreme in this area? Well, there's two reasons. One, the beta that I already explained. I've talked about that a lot in today's show already, that if something moves a bit, this moves more. But also the reason for this is because 100K was a magnet and needed to be tested. Always 110, 100, 1,000, 10,000, 100,000, whatever it is, 100. Human beings can't get enough of it. It needs to be tested. But this movement in the markets was 1-to-1. As you opened up your chart, if you saw Bitcoin had a red candle, right, during it, then you'd see that NASDAQ had a red candle during it. If it was a green candle, it was a green candle for NASDAQ, and that there, perhaps that's not the best way of showing you. Maybe I should just use the comparison thing. There, sorry. Q1. Right, and that might make it easier for people to see what I'm talking about. I don't think it truly does on that screen as I'm looking at it. So, but feel free to mess around with that if you want yourself, and you'll see exactly what I was talking about. Indeed, the easiest way to do it is simply to open up the charts on Bitcoin and look at them for 45 minutes. If you want, like flicking between NASDAQ and ES and Bitcoin. Any time between, well, just, whenever you want. And you'll see it happening. You'll be like, oh, right, what's going on here? This looks like it could be doing this, it could be doing that. And then occasionally you get moments where it looks like it could decouple, like when Bitcoin pushed further to 100,000. And then during that phase, actually for the next couple of hours, NASDAQ pushed lower, Bitcoin pushed a bit higher, because there was a sense there, it's like, no, we needed to reach our area. And this is a big technical concept, by the way, from trading. And while I can wax on about how markets are abusive lately, this is a fundamental truth, that markets will always seek liquidity. And because markets always seek liquidity, right, it means that in times of stress, it will what will markets do? And I've got a big clue right up above, right? But in times of stress, what will markets do? ... question mark. Now, if you're sitting at home and you're saying, Rocky, the answer to that is quite easy. They will seek liquidity, and the answer is because markets always seek liquidity, then that's true. But what does this kind of adage mean for you? Well, it means that if you know that markets are dumping because NASDAQ is dumping, right? And that means that your Bitcoin is also going down, then Bitcoin is going to what? It's going to seek liquidity, which meant that Bitcoin had to go to 100K, right? It had to go to 100K. It wasn't just that, Ethereum, it needed to go all the way down to $3,000. Now, $3,000. Bitcoin dropped 5%. 5%, right? ETH, what? 13%, wasn't it? 13%. Why was there massive difference between these two when this does not normally happen? Why? Because it had to go to test what? $3,000. $3,000, like such a human number. It had to go and test it. Had to. This human, understandable thing had to be tested by these what are clearly automated systems, and liquidity is being provided by liquidations. And the open interest on the bear side is stacking up because the bullish open interest is being liquidated out of the market. Yet nevertheless, it had to go and seek the liquidity. So when the markets were free falling, then it seeks liquidity. Even if during that you might get a red candle followed by a green candle, followed by a red candle, followed by a green candle on NASDAQ, Bitcoin, what's it going to do? A red candle followed by a green candle, followed by a red candle, followed by a green candle. More or less the exact same look, more or less, but this one's going to have a different stretch to it as it seeks liquidity. And that's what's been going on in markets. And the astute amongst you will have already noticed that the key thing to understand here is I'm looking for that decoupling. And I'm talking about a decoupling on a very micro basis, decoupling where you can say for a couple of days in a row that Bitcoin's gone up while NASDAQ's gone down, for example. And during that, to see the Bitcoin dominance tank and for alts to go up. And I think that this is a highly likely, I'm leaning to 55% likely, like I'm leaning towards this is the more likely outcome, despite the fact that it's all like chaos right now. I'm leaning towards the fact this is a more likely outcome. So that's why I'm presenting this more bullish scenario while I'm talking about this major stresses. I did mention that Bitcoin could go down to 92, all of those same beta implications for whatever altcoin or stock that you're trading, because the same thing's happening with your stocks is applies equally, but the main thing that I'm looking for then is that decoupling and to see something act a little bit different. This is a nice movement back up. Take it out Fibonacci, see that it's moved up highly, it's back testing another level, but is that even fair to do it from there? It's funny that, isn't it? It really did give people a kick in the teeth before dumping. But the general idea, can it go up towards a 1618? Well, if it did, I mean, what, like, oops, I just closed my own screen. Just a second, folks. How do I get that back? How do I get that back? Shit. Well, there's that one. Okay, we're back. So if you look here, you can see that the 1618 lines up exactly with the area where it dumped from overall. You know, so this is where the dump started at. This is the exact area where the target from this recovery takes us. So I'm using a very technical basis to say that I think that there's going to be this movement back up the way, right? Very much a technical trade setup from my own playbook. Do I recognize the fact that this is flipped into the very bearish area where things are being tested? Yes, I do. But what am I saying about it? I'm saying that markets will seek liquidity and that the test to 100,000 was inevitable on Bitcoin. The test to 3,000 was inevitable on Ethereum, and that and it's not about what's happening at the time. As you know, in life, like I said, you're lucky to be here. You've lived a good life and you've got here so far. It's not about the challenges that you have at the time. It's about how you recover from them afterwards. Shout out to everybody. You're a good person. You're a good person. You know, you're a good person, and you deserve good things in your life. You know, it isn't about the challenges you have in the moment. It's about how you recover from them, and the bounce back could be good on this. But the idea then thereafter is to say, well, would you be confident if you saw Bitcoin or Ethereum at $4,000? You would be more confident having tested 3,000 in the recent past, seen at 4,000, than you would have been for the previous, and let's just bring up the chart here, for the previous time during this section. Let me just get the replay button so you can fully put this into context for yourselves. I know it's been a big show so far. I haven't even got on to the other shit. So look here, this is the movement up that's happened. You know, when the prices are up here above $4,000, bearing in mind that this is the 4K line here that I've drawn in, during that period of time, it was very much a case of saying, well, you know, this has been a very distinct range. If we make it back into this, we'll probably have to go and test some key areas. Perhaps this, which was a 618 at the time, a Fibonacci golden pocket at 3,000. Perhaps this needs to be tested. If we can see a test of this and not dump, then we'll know that we're outside of just ranging behavior and back into, and I'll go to a bigger chart just briefly, back into trending behavior. Because if we look back over the past this section, we've had one downward trend, right? one upward trend, sideways, sideways, maybe a downward trend during that. You could maybe call that an upward trend, but it's not exactly been ideal. And if you're to look towards that and say, well, we can test off of this, and then just to put that into context, that is halfway in that zone. So if you are in a box and you look to live outside of the box, because running up to it, you came up the way, then you went inside a box, and then you wanted to live outside of the box, where do you think on the box you'd want to test? Well, it'd be there at the 50% area. It's where the $3,000 is. I feel confident that there's going to be more upside and more is going to continue. The craziness is going to continue, and the headlines about Muslim communists and broken down trade deals and tariffs and so on will continue to batter you and make it so it's really difficult for you to benefit in what is clearly a bull market, right? Clearly a bull market. So how are you going to benefit during what's clearly a bull market? Well, it's going to come down to understanding these nuances and removing yourself from the stress of the ebbs and flows of the market and understanding what's going on there. We made it to our target. I've done a really good show today, folks. So great. And we're going to start talking about LivePerson just now, which means that I should change my show to be members only, right? This is something that you can do on YouTube, although I don't really do it ever, but it's something you can do on YouTube. So I want to see if I can do that. I don't know how you do that. I thought they made it easier to do this. Content live. Visibility members only. Done. Save. Close. And then go to my stream settings. And how do I edit these details, yo? Try this on a bigger screen. And we'll start talking to what I always wanted to talk about. Okay, I can't tell how to edit my settings like I used to be able to on the YouTube thingy, so I'll not do the members only type thing that I was going to do with only the chat box, but it is a members only stream now, so if you're not a member of my channel, welcome to it. It's fantastic. And if you're not a member of my channel, then you've managed to make it here before it went members only. That's cool. Hit that bell. You really don't want to miss out on my episodes. And let's get chatting a little bit about LivePerson and what it is that I want to look for, right? So there's a few things I want to talk about today. We're not freezing, we're not frozen. Seems like we're not frozen, right? The members are not frozen. The non-members are maybe frozen. Hard lines to them, right? You know, that's it. You want to be a member, you want to, hard lines to them, right? So right, you're here, I'm here, let's do this. I want to talk about LivePerson's upcoming earnings, right? They're coming up on the 10th of November here, and I have this is an SEC. I have like an earnings call transcript here. This is the last one, and I wanted to take a look through this and kind of prep people a little bit before the LivePerson earnings actually happens, so that you've had recent experience of hearing them speaking, but not in real time, because we'll use the words and we'll read it out loud. So you can understand the words that they're using better before they say them on Monday, so that you're prepped and can hear for what you're listening out for. That's good. I'm going to talk about a couple of the things that are the things to look out for here briefly before we dive into looking at any individual lines on this. And I will then at the end of that tell you what I'm looking for. We went members only, kitties, that's right. So that explains that to folks, if you're wondering. So the first, so the things that I want to say here first, right? What are the first major things that we should look at before we get around to looking at like the any details, right? So the first one that I want to talk about is the Gen AI adoption. I've spoken about this on recent shows. Jamie and I did a show a couple of weeks ago together, where we spoke about this in some detail, and I want to bring it up again here. So we're looking at the. Oh, my chat box just broke. Is my internet broken as well or something? Is it still working? Not here. Not sure. Not frozen. Yeah, Katie's is not frozen. Just somebody put the still with me. I put that in the chat box. Somebody reply and let me know you're still with me. Okay, you're back now. Sweet. So Gen AI adoption. That's the big thing that I'm looking for in terms of early chat in the earnings call. I'd like to hear some chat about how many more people are using the generative AI part of the business. What we've seen was that the most recent ones disclosed 17% of all conversations, which was in Q2 2025, used generative AI, which is up from 12% in the prior quarter of Q1 2025, and up from an even lower number. And we're seeing sequential improvements, sequential growth with the generative AI part of the product. Why is that a big focus for me? Because it directly relates to two things. One is the new contracts, new logos that join up, because a lot of new logos are looking for that and they want to have that integrated. And two, it's for the renewals and combating the churn, because if we see continued growth in that, then we're seeing that there's an expansion of the offering of the product that people are taking up. And it ties into a reason why you would renew and a reason why you might join up in the first place. LivePerson is actually an orchestration company. It manages. If you were to build a house, you could do it yourself and organize the plumber, the electrician, the everything, right? And the laborers, the guy that drives the forklift, the guy that does the bricks, where you're buying all your stuff from. You could do it all yourself and you would be managing it, or you could give it to somebody else to do who's a project manager, and they'll manage the project for you, which gives you the time to do things like go and talk to an architect, which is why people do that. Businesses sell products. They need the time to sell and manage and work those products, and they need to spend less time managing customer journeys on the post and pre-purchase stages, and to focus fully on the actual purchase moment and the product or service itself as that business. So what they like to do is they like to outsource this part of the business to somebody else, the same way that if you were building a house, you would outsource the building part to a project manager. It's standard practice. So they orchestrate conversations, and that means they take all of your old stuff like emails, all of your new stuff like WhatsApp and Facebook Messenger, and then all of your even newer stuff like AI generated chats and understanding, transcribing voice into text, to read it with an AI, to give you a summary, to make the conversation go quicker with the customer service representative, do all of that for you, and that's called orchestration. And a small part of that is generative AI, and I want to see that growing. I want to see bookings expanding, new logos expanding. I want to see partner, some motion on the side of the partners. Deal flow cadence so far has been in Q4 2024, 9 new logos, 30 expansions. Q1 2025, 50 deals, which was 5 new logos, 45 expansions. And then in Q2 2025, there was 38 deals, 3 new logos, 35 expansions. Sometimes you get bumper months in where you get extra logos. We heard that in the transcript of 2024 Q4. Sometimes you get months where there's a few less. Like in Q2 2025, there's only 3 new logo signups. But there's somewhere between 3 and 9 in the last 3 earnings calls, I want to see a number above 3. I want to see a number above 3, but I also want to see the total deals number being high. If you remember, there was 5 new deals in Q1 of 2025, but there was 45 expansions or renewals, which was 50 deals in total. So while I'd like to see new logos and stuff, I'm wanting to see a high number on the deals overall count. I want to see profitability increase. Obviously, these are the big headline ones that we'll see in there. We want to see the cash improving, the cash situation, cash flow situation improving, and I want to see discipline and achievement of the guidance that was set out. I want to see, what they project for future and the trajectory to get there, and I want to see them have a tight or elevated trajectory compared to what their trajectory is in the guidance that they say about the future and how to get there. And we've actually seen that they under promise and over deliver sometimes in their earnings calls, so that's a possibility. Do I expect these earnings calls to be good, by the way? No, the next one's going to be bad. We got told that in the previous one. We got told the next one's going to be bad in the previous one. Why? There's loads of costs which we have to deal with, like temporary one-off costs due to things like the reverse stock split and all of the restructuring of their debt and so on. So there's temporary things there. A lot of attention's been spent on that. A lot of man hours have gone into that. Like I say, LivePerson themselves, they want to focus on the product and services that they offer and spend less time dealing with other things. So that was a quarter where we dealt with some other things, and we could see that impact on some of the other sides of the business, of course. I want to see the cash balance, right, doing well. What we've seen is it's gone like 183 million to 176 million to 162 million. I want to see that being, manageable and positive and with enough headroom in there to do all their capex and everything else they need. That's going to come with a lot of qualitative information. I want to hear that. Ideally, it goes up, right? I mean, it goes up. There's been things happening. It goes up. But I need to see the detail on it. We're going to be looking in detail as well at that capital structure and the kind of the friction on the macro scale. We have this refinancing, and the outcome from that needs to be kind of greater sort of displayed to us in the earnings. What happened there was they exchanged 341 million of 2026 notes for 45 million in cash, plus 150 million in due 2029 and 39% equity, which deleveraged 226 million, and it pushed maturities to 2029. So there's been a huge positive boon on the restructuring element of things, but it does come with a sort of balance. On the one hand, they're spending less per year, but over a longer time, you might find you end up spending more than you otherwise would have if you can't perform well enough as a business to justify that. So we want to see an improved ROI, of course, and the biggest way to get that initially for LivePerson has been to cut down on all of the costs because that's been a problem. So you're going to get a better ROI if you've got a lower cost basis, but also as well, we want to see actual ROI there to demonstrate that this debt is obviously good to have. But the debt is good to have because it's way better than it was before, way better. But we just need to actually perform and really show that's a thing. I'm going to see positive EBITDA adjusted, I expect that. So at very least, I demand neutral on adjusted EBITDA. Platform without any sort of, with any caveats obviously included in there. Like I did say, there's big restructuring costs. Platform, those are temporary. This could be seen as scattered to somebody. I hope that you don't find my staccato sentences too scattered. This restructuring costs are temporary costs. They're not going to really come into effect the EBITDA, which is earnings before interest, tax, etc. So it isn't tax coming off the earnings. It's a temporary cost, and I want to see an improvement on EBITDA, and I also want, so you get the full sentence now. I want to see the management's stated headwinds, right? So we've spoken in great detail in earnings calls about the headwinds that get spoken about by the management. They will probably tell us some more about that. I want to see things like where they are with regards to any uncertainty and greater certainty. I want to see things like win rates of the new clients and logos, and of course mention about the churn. I'm going to get on churn in a second. Some people might have predicted the thing that I wanted to see was churn or profitability or margins. These are things I've spoken about in the past, but I have a specific metric that I'd like to see. you might have predicted as well that if from the goal, you might have predicted that it was to do with Gen AI adoption, which is a big thing that I talked about a lot with Jamie on the show a few weeks ago. It really is, if I wasn't doing that goal, that would be one of the ones that for sure is my top thing that I'm looking for. For sure, I want to see that movement expansion. I want to see customers love the product. By the way, it went from 12 to 17%, but you have to consider that this comes first through expansion and new logos. Renewals, expansion, and new logos is where the increase in Gen AI will come from. I don't expect it to have a linear trajectory upwards, whereby each day X% of their customers use Y% more Gen AI. I don't expect that. Not looking to see that. What I am looking to see is chunks upwards of that, and with each chunk that goes up, it's probably directly correlated to a new logo or an expansion. So I don't expect a linear curve up. I don't think it's 10% today, 10.1% tomorrow, 10 days later, 11%. I don't think it works like that. I think that it'll go up in chunks as these expansions and renewals happen. So that's why that's a key figure, by the way. It's not just a linear or a consistent upward curve, linear, logarithmic, whatever. It's not a consistent day-to-day curve. It's to do directly with their back end of their business negotiations. That's why I want to see that. I also want to see the platform roadmap in the key performance indicators. This is a more complex one. Timing has been slated for around October and early completion by next year, in terms of the GCP migration and Databricks unification. So this is stuff that they're doing with their tech in the back end. We're anticipating it being done sometime between October and early next year, which means that we're in October. And although the earnings reports are in arrears, they're looking backwards, we will get some chat from the management and we might get some idea about how they're working towards these goals. So the thing from me, though, that I want to see this time, and the key part, and it's the fulfillment of the goal chat, is to do with revenue quality, retention, and RPO. So the recurring revenue mix, 94% in Q4 2024, 93 in Q1 2025, 92 in Q2 2025, right? What do you see there? 94, 93, 92. I want to see that no longer trend down. I'd be happy with 92. I'd be quite happy with 93, and I'd be over the moon with 94, just because it reverts some of those figures, right? And you'll notice a trend here in what I'm talking about with regards to these figures, right? Net revenue retention, NRR, as mentioned in their earnings calls, was 82% in Q4 2024, 80% in Q1 2025, 78% in Q2 2025. They are looking for net revenue retention, this is churn by the way, to improve after the legacy cycle completes. So we're looking for a turn on that. So if we hear net revenue retention, NRR, and it says anything above 78% or 78% or close to 78%, and they can say, and that is it, we are going to be looking at a higher number next time. So this links back to the guidance and the chat and the qualitative statements that go around these quantitative key points. What I want to see is net revenue retention stabilize. 78 I'd be okay with. 82 I'd be very happy with. 80% I'd be really happy with, because they're all up above and indicate a change in that trend. ARPC, average revenue per customer, right? This is another big one, but I've spoken about this before a few times, so you could have guessed this one. So that's not the answer in and of itself, but it was 625k in Q4 2024. It then became 640k in Q1 25, and then it was 655k in Q2 of 2025. I would love to see that at 670k, 675, 680. Keep that going up. That's the one trend I want to see continue with regards to what they're doing there, because that's really good. Really, really good. That's one of the underlying really positive things that gives you confidence that this business is actually going somewhere. The customers they have want to pay them more and get more services from them. And then the thing that I want to see most, and you can actually see it over here. Now this is an earnings call from the 30th of June 2023. It's not an earnings call. Sorry, this is their filing with the SEC, Form 10Q. It's basically the quantitative side of the earnings call, the hard data part, the numbers, right? And you can see that in there when you search for remaining performance obligation. Remaining performance obligation, okay? So this is an RPO, remaining performance obligation. And in June 30th of 2023, which we can look back at and say these were the good times, they had a remaining performance obligation of 326.3 million. Now, what we've seen in the recent earnings calls is a trend on the RPO down the way. It went from 232 million to 221 million to 197 million. And this is the remaining performance obligations, means their forward-looking earnings income over the next, 12 months, 24 months? Yeah, 24 months. Their forward-looking income over 24 months. Now, we know from the company that their legacy cycle lasted 18 months. So at any given time, their forward-looking performance includes 18 months. It's 24 months. It includes the 18. So that 18 is directly their anticipated income based on the current bookings that they have. And every time a customer drops off and is no longer going to be adding on 10 million to that overall figure of their own that they are going to be obliged to pay LivePerson, and they cut that contract, LivePerson loses a full value customer. They might lose millions of dollars off of their anticipated income every time a customer drops off. But every time they get a new customer, their income starts small and expands. So every time a customer drops off, it's a big drop. Every time a new customer comes in, it's a small addition, relatively speaking, to their earnings forward looking over the next 24 months. So what does it mean if we see that figure stabilize? If it was 220 million or 230 million, 220 million, 197 million, so 200 million, right? And it's dropping down. What does that mean? It means big customers are dropping off, and the new customers they've had over the last several months are not yet adding enough income to make up for that. We know that there is churn. They've been very transparent about that. And that figure has then dropped off as the churn has continued. It doesn't get addressed immediately. With new customers signing up. So the 9 new customers in Q4 2024, the 5 new customers in Q1 2025, and the 3 new customers in Q2 2025, along with the 30 plus 45 plus 35, 105 expansions and renewals that happened over those quarters, haven't been enough to offset the drop-off in customers. And this is seen in hard data numbers in the remaining performance obligations. And in previous earnings calls, the likes of John Collins and so on have said that they are looking to see their RPOs stabilize. And that is going to be huge. It's black and white, published information. It's official. It's definite. It's so to speak. The companies that are owed them that money could go bust and never pay it. So it's not guaranteed, which is why it needs its own separate area in the accounts, right? It needs that because it's not 100% guaranteed. However, it is money that is due to them, and they're going to get all of that money. So the remaining obligations represent unsatisfied or partially satisfied performance obligations pursuant to blah blah blah, right? Revenue from contracts with customers. So when they say that they've got revenue from contracts with customers, they need to also say what the remaining performance obligations are for that. And this figure directly turns back to churn. And when we see this stabilize, we know that it is that the customers who are dropping off are worth full value customers. And the customers that are joining up are worth much, much less. So if their forward-looking earnings for 18 months stabilizes, it means that the drop-off in value of the customers that they had experienced in the quarter is now no longer adjusting their anticipated revenue while you have a backlog of new customers whose revenue is going to grow. So it's a very forward-looking leading indicator on their overall movement towards profitability overall. And that is why that is one of the key things, and is my key thing, I suppose, from this. If I just search inside this, can I find RPO? See if we get some chat here. So you can see what this would sound like, right? What this would sound like during an earnings call. So this is why we decided to do this here. So you can see, right? This would sound like, this is the last one. This was LivePerson Q2 2025 results, and John Collins is speaking. And what he says is, revenue was $36,700,000, and international revenue was $22,900,000, or 6,238% of total revenue, respectively. Average revenue per customer was $655,000, up 4% year over year, driven in part by expansions with our largest customers, and in part by customer retention. RPO declined to $197 million, consistent with the same factors driving declines in revenue. Net revenue retention was 78%. So you see, this is one line. There's one line in here, but it is so important. And if that line came back and said RPO stabilized at around 195 million, consistent with the factors driving stability in revenue now that we've made it past our legacy slump, blah, 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 our margins remain really tight, but we know that the drop off in large full value customers is big, and the backlog of new customers we have has not yet got to maturity, but we've stabilized our forward-looking income, right? That's everything, isn't it? Isn't it everything? But it's in one line. The thing is, it's also surrounded by other lines. Like I said, net revenue retention, 78%. What did I say it was in the previous quarters? Well, net revenue retention was 82% in Q4 2024, 80% in Q1 25, 78% in Q2 2025. Again, right? As a reminder, net revenue retention is a function of in-period revenue, but this metric will continue to decline until revenue begins to grow again. So what I'm expecting is to see net revenue retention dropping, right? Why? Because one big customer is a big value, fully matured client who's maybe paying X million dollars a year and it gets cut off all at once, bye-bye, no more pennies at all from that, all in a one moment, versus a new customer who's growing. So if we can see that revenue retention is still declining, but we've got a stability coming in RPO, then what we're seeing is that the backlog in customers is an unquantified forward-looking growth metric that is going to come into play very soon in the next couple of quarters, which would be when other people hear it spelled out black and white like that, like I'm doing now, possibly 3 to 6 months in advance, right? Maybe they talk about it on the 10th, but they might not talk about it until 3 months or 6 months has gone by. They might not, okay? But you understand it now today, and everybody else won't even see that figure until they've changed the conversation round and start including that information in what they publish to people. So we can read between the lines. It's not even reading between the lines, it's literally just reading the lines. I mean, here are the lines here. We can read the lines and understand them. And by doing so, we can understand what's being spoken about, right? That's the key part for me. And this thing's long, so I'm not going to go through it line by line the entire way. But I do think it's worth diving into a couple of sections here to see some things that are interesting and worth listening out for in the upcoming earnings call. The first one, I think, is that, I mean, obviously, right, he comes on, John Sabino comes on, says thanks to the other John who introduces it, and does the same sort of thing. Now, every time we do these earnings calls, we get a similar process. You follow a kind of protocol that you go through. So similar things are mentioned at similar times by the same people who spoke about those things the last time around. Then you will get some sort of, in this, which is like an abstract to the whole thing, you'll get some key pieces of information. So obviously, as soon as the earnings call starts, I'm listening out for great key pieces of information. But what we saw last time was building on last year's successful transaction with Lynrock Lake. I'm pleased to share that this refinancing agreement represents a decisive step in strengthening our capital structure. Yada yada. That was all about the runway and the debt restructuring and all that stuff. Really big. We might even see more of that talking about it. Now this time it was in the process of happening. What I might see here in the start is saying we're already seeing the improvements in our business metrics based on the successful transaction where we restructured our financing agreements. This is reflected in our adjusted EBITDA going neutral to positive. We anticipate that by the end of the year it will be positive, and that's as a direct result of paying out, well, I mean, he won't say it like this, but we're paying out less interest debt every month. Therefore, we've got bigger margins and we're more profitable as a company than we were before we restructured this debt. And we're already seeing that in these results here this quarter. That's what I expect to see, right? Anyway, as you can see, I could get dragged into the minutiae of this and go through every sentence. But just to point out, he mentions adjusted EBITDA in the first, intro to this whole chat. And that's something I'd be looking for. He says, in the second quarter, we experienced a 45% sequential increase in conversations powered by our generative AI suite. 45% sequential increase. It went from being, so in fact, over 17% of all conversations on LivePerson's platform leverage at least one form of generative AI feature, up from 5 percentage points a quarter ago. Now, I wasn't particularly clear in here, but had I not had that really interesting thing to say about the remaining performance obligations, which is super dope, right? I mean, let's face it, great insight. If I hadn't had that to say, what I would have been chatting about in today's show was this line here, because it's incredible. And I think people need to really understand that LivePerson is an orchestration company, which in Q1 of 2025 only had 12% of their conversations had AI involved in them. And in Q2, 17% did. I mean, it went up by nearly 50%. It went up by 45%. So if we could see a 45% increase again, right, which is obviously very difficult to achieve quarter over quarter, then you're looking at 25% of their conversation, a quarter of all conversations use Gen AI. And this is something that none of their conversations did a year or two ago, right? None of them. So now it's happening. And our chat about LivePerson has always been that it's the worst house on the best street. AI remains and will be the best street, just the way that the internet didn't stop being the best thing ever in the .com crash. No matter what happens with AI, it is the future. We have to embrace it. It just is. And there's no stopping it. So they're getting into that now, and they're a really cheap company in the AI world, and we can see that it's growing and growing and growing inside their business so much. It's so super important, that line. It's so super important. Just throwing out there at the start, like. I think one of the things that Zindale will bring to the board, by the way, and what I'm looking for in this next earnings call is the Zindale effect. I think he's going to be like Martin O'Neill has been at Selleck over the last week. Hail, come on the hoops! If you're a boys fan, let me know in the comment down below. We're going to see a resurgence in positivity in the way that they speak in the meeting, in the earnings call, I think, or at least clarity, which when things are clear and you can hear the difference between one point and the next, then it's way easier to pick up on the positive points because you can actually hear them. And I think that's something that the Zingel guy is going to bring to the board in spades. Anyway, so you can go through it like this, right? You can go through it like this, and you can find every individual line. I've given too much time away to the qualitative chat around what I'm saying. I don't have all day to spend on this any longer, but I can try and do that sort of stuff. The next thing we're looking for is obviously the customers. He likes to talk about customers. A premier diagnostic provider deployed our routing AI agent bot, and within 3 weeks saw a significant decrease in call volumes while increasing messaging volume by 7x, demonstrating a rapid adoption and scalability while achieving 97% routing accuracy and 86% on customer satisfaction score, which is super positive, and it's just a little case study. Okay, so I'm into this. I'm here for it. John, tell me more. Tell me more of your case studies and the success that you've had. There'll be different ones. I'm looking forward to it, and that's great. It's to do with their customers and stuff. I want to see more follow through on the deepening relationship with Google Cloud. They've had great stuff kind of happening with partnerships with Google Cloud, but there's not clarity around it. I don't really know how this impacts the bottom line, and I'm not seeing any throughput on partnership, yet, because I'm on the outside. So this paragraph here demands further information. This whole thing. So the strategic alliance is built on the foundation of our ongoing migration to Google Cloud. So this is an ongoing migration, and I think this is to do with the thing I said in my notes there about the GCP Google Cloud partnership stuff, migration that's happening, and I want to hear about it. It's meant to be done around October and completion by early next year. So we've got all that in there. Right. So this is about strategic partnerships. He talks here about the broader macroeconomic uncertainty, and that's true. LivePerson isn't massively exposed to interest rate fluctuations. It's not going to be the make or break of the business. So recent stuff doesn't necessarily change things. The recent cuts in the Fed, although it is a loosening of economic conditions, and hopefully it addresses some of the uncertainty or the headwinds that they have there. So I'd like to see, in terms of this qualitative statement here, something which is in any way more positive, but I understand if they deliver another negative one. This is kind of you have to go positive, negative, so I understand. Based on the slower bookings and renewal hesitation from a select large customers, we're advising full year revenue guidance to that at the midpoint. So hopefully, since they revised down their guidance last time, I'd like to see a bullish thing would be for them not to revise it down this quarter, right? Because each quarter that drops and they see their revenue dropping, they have to give their revised outlook. It's been no surprise that it's correlated with their remaining performance obligations as well as they look towards the end of the year. So if they have any of that sort of fluctuations there, it can change that figure. Hopefully baseline neutral, positive, bullish AF if that goes up. Baseline neutral. There has been some costs, changed. So that's good, but costs is margins. Revenue is 1/2 of that ratio on that margin, so it's not the cost reduction doesn't improve your earnings, it just affects the margins. But I'm key on margins, obviously. At the same time, we're managing a business with financial discipline, yada yada, and we get to hear a bit more about about how they're looking to get their, achieve their guidance midpoint or better every time, of course. He mentions again the sequential growth in generative AI, and of course the Google Databricks stuff, new momentum and opportunities. So that's why I want to hear more about that. And you can see that's very qualitative, and he hands it over to John Collins at that point. And those are the main things I want to hear from John Sabino, along with enthusiasm, positivity, and clarity. More clarity the better, John. Always more clarity the better. And by the way, John, you do a great job in your earnings calls. If you're watching today, thanks very much. You do a great job in your earnings calls. When I say Zingali will bring in that thing that's missing, it's not a criticism. I just do think that the presentation of them demands consistency and clarity, and if there's somebody who's consistent and clear in the way that they're able to frame their messaging, then Zingali's the man, and I think that'll have that impact. But I do appreciate what you do there, John. And then we've got John Collins here, who's the CFO, COO, and this is where we get back into it. I've already covered a couple of things here, but of course the critical thing for me is the RPOs. But we see there's a lot of chat in here to do with the refinancing, restructuring the debt. So we need to kind of move past that now, but in a way that gives us updates and positivity. Jumping ahead to 2025 stuff, the debt maturity looming large minds of all LivePerson constituencies, commercial progress slowed relative to the previous expectations, yada yada. They had to do a lot of work here, right? And that is a lot. But turning to the quarter, in terms of deals and significant customer wins, and this is where it gets back on track with the stuff that is easy to hear. So if we hear him saying, turning to the quarter, in terms of deals and significant customer wins, we signed a total of 38 deals in the second quarter, including 3 new logos, 35 expansions and renewals, translating to a quarter-over-quarter increase in deal values of 15%, but a year-over-year decline of 9%. And you can see the conflict there as large customers drop off and new ones come in, and you can see how there's a decline in the overall big value matured customer versus the new ones that are coming in, getting a quarter-over-quarter increase of deal values of 15%. So we're signing in people at bigger amounts. It's great. We're getting more money from our customers when they come in. They're buying more from us. But our revenue over the last year has declined by 10%. That's going to be a big sentence for me, because this is one of those two-factor sentences which where the toxicity of the negative side is offset against the positive one, which is great, but it really diminishes that positive message, right? Because you're putting them both together. Whereas if the toxic message was contained in its own barrel, covered in lead, and put at the bottom of the ocean, and the positive one could shine, that would be really good. And I expect to see more clarity on that front. But I'm listening for that sentence, okay? He does mention as well sometimes about big deals and stuff like that, so I'll be listening out for that sort of stuff too. That last earnings call was really heavy with restructuring and debt stuff. You can see all this negative stuff, right? Increasing concerns from enterprise customers regarding the financial stability of the company. This is what makes it hard for them to sign up all the customers, as John Sabino was saying earlier on in the call. And that's been addressed massively. All this chat here obviously is tough, and you want to see, obviously we're looking to hear ongoing cost discipline and operational efficiencies, but you want to start to hear at this point, 3 quarters into the year of doing this stuff, that we've had some traction on that front. Okay, so I'm looking for traction here. Turning to our second quarter results, total revenue was 59 million. So this revenue figure will probably decline again, right? And I'll be hearing out for the headline of the revenue figure decline. This is the one that obviously gives stock price a kick in the teeth and everything else. If this figure is within 6 million, right? If it's above 53 million, then it is positive compared to trend, right? Positive compared to the trend if it's above 53. If it's anyway close to 59, it blasts the trend out the water and makes it look like the churn has ended. And if it's anything above 59, well, I mean, that's insane. It's insane. It's not going to be. I really don't think it's going to be. But total revenue figure, huge figure, really important for the results. I'll be listening out clearly for that. And then I want to follow through here with a really positive adjusted EBITDA, right? Because it doesn't really matter what your total revenue is if your earnings before interest, tax, blah, 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 is only 2.9 million. You want to see this figure going up and up and up and up, right? And this ratio to get way better. So I'll be listening out for those two sentences. Revenue from hosted services was 50 million, down 25% year over year. Recurring revenue was 55 million. Further segmenting revenue, professional services revenue down 26% year over year. And this is something which is like every one of these year over year statements is bad, until we eventually get to the point where last year was crap and this year can compete. The business model that they operate with has changed, and hosted services no longer is as big a deal as it was before. These sorts of things, we need more clarity on it, right? We need more clarity, and I'm listening out for those figures, but that's what I'm listening for. Clarity on that front, just about how this fits into their guidance and what they expect from it. Figures like 25% year over year, and down 25%, down 26%. They're horrible figures to hear. So we want to hear better figures. Revenue at 36 million, international revenue 22.9 million, and that's interesting. This is to do with like the spread of their customers around the world. Obviously, I want to see this growing. I want to see their domestic revenue grow faster since they're ostensibly an American company, but I'm really impressed with their foreign revenue, and I'd be tying this figure back to any partnerships that they have, because I know a lot of it comes through partnerships. I mean, the Microsoft store in China uses LivePerson on its AI. Why? A partner does that. So Microsoft store China is a client of LivePerson, but it's through another client that they're a client, and it's foreign income, and I want to see that increasing. But it's to do with the how integrated they are across the market, and it's a bit of a moat. So it's a bit of a moat. So I want to see more of that. Finally, in terms of cash, we ended the second quarter with 162 million of cash on the balance sheet, inclusive of the proceeds from the transaction with Lynrock Lake last year. Right. In terms of guidance, last year, when we see this, we'll also see inclusive of the 40 odd million that they got from the recent restructuring as well. So that's a big deal. In terms of guidance, while the refinancing agreement announced today addresses a primary concern customers have consistently cited during commercial discussions, renewal friction and slower than expected bookings in the first half caused us to revise down our outlook for the second half. In terms of revenue for the full year, we're lowering our range to 230 to 240 million. And this is I already mentioned this as well. I'll be listening out clearly to this. This is in terms of guidance. And the first sentence started off with them saying, we've had to do a lot of work to get it so that the runway is long enough that we can guarantee our customers will still exist in 2 years, and in that case they will be happy to sign a 2-year contract with us. But before, when we asked them to sign a 2-year contract and we could only say that we're guaranteed to exist for a year, they weren't inclined to do so. We've had to do work on that front. That's a massive qualifier. It directly reminds people about how there's been all this negative stuff they've had to overcome right there in a sentence. It's the sort of sentence that Zingale wouldn't say. He just wouldn't say that. He'd say there's a better way of saying that, bro. But they said it then. It was before he was in giving them that tip or whatever. And yeah, I want to see this. I want to see this clarity. I'm listening for this, but I'll be listening for clarity again on it. Now, I found myself in a situation where I've been going through all of this, and I'm nearly at the end here. So I didn't anticipate doing the whole entire earnings call, but we're at the end, and we can kind of revise and understand what we're looking at more clearly in a second. There's one chunky paragraph that John Collins is likely to say, which is likely to concatenate important information into little sound bites that you'll miss by the time the next sentence comes along. That's the sentences that begin with RPO, or remaining performance obligations, sentences that begin with in terms of guidance, and the sentence here as well, as for the bottom line. Then this is how John Collins likes to kind of finish off here. We continue to balance our cost structure and expected business performance with a focus on preserving cash and reallocating resources to both deliver on innovations for customers and modernize our architecture through Google Cloud Platform migration, which is also essential for our customers. As a result, we now expect to deliver positive adjusted EBITDA for the full year. So they are another quarter closer to it, 3/4 of the way through the year. I think that we'll get more clarity on this sentence. As a result, we now expect to deliver positive adjusted EBITDA. So I'm looking for that clarity on that one. I'll be listening out for it. So any sentence that includes the words adjusted EBITDA, I want to hear as being positive and ideally above 2.9 million. Accordingly, we are raising our full year guidance to a range of a loss of 3 million to a profit of 7 million, right? So any sentence that includes the words full year guidance, massive, right? So I'll be listening out for full year guidance and guidance. Any sentence that includes the word guidance, right? And then what figures come afterwards. So last time the range was 3 million to 7 million. That's a $10 million range from -3 to +7. I want to hear it getting an improvement where we lock this in, where we can get a loss of, where we can look towards getting clarity where we're going to be in the top half of this, right? -3 million to 7 million. Let's 3/4 into the year in November able to anticipate what it will probably be by the end of Q4, I want to see this be better than 3 million at the lower end. So that's a big sentence to listen out for. Now there's this one, which is probably more sane, more sanity, more clarity, more important, where we talk about hard losses. So the loss on the company was going to be 14 million to 0. We expect adjusted EBITDA in the third quarter from a range of a loss of 4 million to 2 million. Okay, so I'm looking for that to at least stabilize. Last earnings revenue were bad because the guidance went down. At the same time, the costs went up loads. This year, this quarter, we still have some of those costs that have gone up due to all of the work that's been going on. So I expect to see some of that. But also, I want to see a flatlining on that trend. I don't want to see the trend continue. I don't want to see more negative revisions. I want to see at least we're anticipating achieving our goals. And better, I'd love to see a positive revision based on if they genuinely had problems signing up customers. Some of those customers might have been waiting in the wings, saying, well, I'll not sign on today, but if you come back and have fixed these problems next week, I'll be your customer. So given that they spent so long doing things like fixing their customer stuff and speaking very, very explicitly about how they've had a problem for their customers understanding their runway and the likelihood of them still existing in a few years, I want to see some positive payoff from that, because we had negative payoff because it was talked about at all, right? And it was negative. So if we get it talked about, it should be positive, because if you're going to present the biggest stumbling block to making a sale, or one of the biggest stumbling blocks to making a sale being your financial security, and then you go through so much pain to get that financial security, you come out the other side of it smelling like roses, you've got financial security, you've moved 200 plus million of debt away, gone, it's gone. Your interest that you're paying out month to month is way down, it's down by over half. Like, you want to see this reflected since they talked about it. If they hadn't talked about it so much, I'd less focus on them talking about it so much again. But they did, so they have to. And then when they do, it needs to be more positive because we've done the work. If it isn't, then it's like, why did you bring it up last time? Why did you say that it was a stumbling block if it hasn't been a stumbling block? See what I'm saying? So it should be something that is positive. These figures, you're just going to have to listen to them at the time and then look at the numbers afterwards. But just generally speaking, the ranges of negative 2 million or negative 3 million up to, or negative 4 million to negative 2 million, and the two ranges are negative 3 to positive 7 and negative 4 to negative 4 to negative 2. I want to see that get to be at least those numbers, not worse, and then clarity about what they actually should expect. Because I do expect that some of the customers should have been waiting in the wings to come in if it was a stumbling block, unless every time a customer stumbled on it, they lost them for life, which would imply there's been no conversations with anybody else. It's like they only phone people up to say, do you want to renew on the day of the renewal? I don't think that that's the case, right? And if it was the case in the past, I think they'll change that business practice, and we'll see that reflected in the chat that they have. Before moving to questions, I briefly emphasise that we've taken decisive action to address concerns expressed by customers, shareholders, employees regarding our financial stability. Commercial progress in 2025 is impacted by customer concerns and macroeconomic uncertainty. The company remains focused on execution, innovation, and cost discipline, and now we have the runway for these strategic efforts to enhance value creation for shareholders and reinforce customer confidence in LivePerson as a long-term strategic partner. That was a strong finish in a theoretical world, but we live in the real world, so this just came across as negative. But what we want to hear is this again in a positive light, the way it should have been reflected the first time, and that will come across as then saying, and we are already seeing that this is having a positive effect. As such, we've got this hard data to back it up. but we've done the hard work now, that we've achieved something special. And I opened up the show today and I had a message out to everybody and said, you've done the hard work now and it isn't about a stock. But here we are in the members only section talking about LivePerson, and the whole story of LivePerson is at one point we will hear them say that they've done the hard work now. Last quarter they did a massive financial restructuring. I want to hear the positive payoff on the other side of that, because there is a black and white to this. It's not just one side of a coin. They did this for a reason. They didn't just do it to extend the runway because they feel happier knowing that they'll survive longer. They didn't even do it to affect their adjusted EBITDA figures. They didn't do it to affect their cash flow position. They didn't do it to affect their cash on balance number. They didn't do it for any of those reasons. They did it for the reason of getting more customers. That's what they said. So if they're not getting more customers from it, I'll be disappointed, as will the rest of the market. But if they are, then I'll be satiated. And that's what the markets are listening out for. And that conclusion from last time would need to be improved. The other part of this, which we go into if we had all day, is to talk about the interesting things I'll be listening to for the questions from people. These questions here last time and in previous earnings calls have been good, but you can't predict in advance what questions people will ask necessarily. Although there are some things that are coming up all the time. So you've got macro uncertainty relative to the balance sheet issues, like what's the bigger impact? Macro uncertainty, like not knowing what the tariffs would be, not knowing what the tax things will be, not knowing what the dollar value will be, not knowing what the rules and regulations are, not knowing if interest rates are going to cut or if people have money or if there's going to be a recession or whatever. That's macro uncertainty. And then there's the balance sheet issues. And this person asks, what's the greater impact? And so like what we're seeing here is that they're in response, he says, positive news is that this allows us to improve and continue those conversations versus a churn at this point. A churn. So see this when he says a churn. They describe when one customer drops off, they call it a churn. And right now, when in this ostensibly negative earnings call last time, they said the positive news is that this allows us to improve and continue those conversations versus a churn. But that's not him answering which one's bigger, the balance sheet issue, the macro uncertainty. But in terms of customers, that I do think that answers it, and it answers it saying that the biggest problem was their own balance sheet issues. So he says, so essentially he's saying balance sheet issues in answer to the question. So that's why that becomes important to see it coming back. And that might be reflected in chat within the body of the earnings call. It might be Ryan McDonald, analyst at Needham and Company, says, thanks for taking my questions. Congrats on a successful quarter, guys. I would love it if you could give me more color on your signups from this month. Have you noticed that they've gone better because of this work you did last time? That might be the question. So I'm not exclusively bookending everything within the body of the earnings call itself in terms of what I'm looking for, but I can't guarantee that Ryan McDonald or anybody else, for that matter, like Diego or whatever, will come in and ask a question that has the answer for me. In fact, last time there was only the one person asking questions, so I can't guarantee that this Ryan guy is going to ask the right question, but he might. And another thing as well, like this is incredibly vague. One of those vague things they've got on the go is the relationship with Google Cloud and Databricks. And can you explain when that's supposed to be completed? And he did say, for some customers in some regions, they'll see that this year around the October timeframe, and we should be complete with early next year with most of the migration. So we're at the point now when we can see that this question would have changed, and this is one of the talking points from within the body, but also with the questions of the thing. And it's why I mentioned it earlier on. Like, it might not seem like a big deal, but there is a vague lack of clarity, lack of certainty. They should be done by October. It's not happened yet, but it's happening for some regions, kind of vague. Now we're past October, we can say, he could come back and say, yeah, well, for Europe, we've actually got that in play right now. We're seeing it having a really positive effect, and it's really good. We're working steadfastly on North America. We've got 40% of it done, and we're going to have the rest of it done by roughly the end of February or whatever. And then you've got certainty, which is very different to what that was. That being said, we're already working with Google, creating capabilities with Vertex and Gemini and doing robust testing on that with that tooling on our capabilities already in those integrations. So customers will start seeing benefits from that, hopefully before even the end of the year. And what that's saying is that like they've integrated this Gemini, it's part of their Gen AI chat. Only 17% of their customers were conversations were using Gen AI in that quarter, only 12% in the previous quarter. Over the period towards the end of the year, they've got massive growth in terms of their partnerships with Google Cloud, pushing into the generative AI section, and he's directly linked the migration towards Google Cloud is being linked to the generative AI part of it and stuff like that. So we want to see resolution, like clarity, resolution. You got a blurry picture there, it's a bit of a Monet, and we're looking to move away from like the likes of Tate portraits and far more towards the crystallized clarity of a Rembrandt. All right, but not everybody out there is a posh art file, so you might not get that reference at all. I think it's time that I actually look at the chat box now, folks, and let me just see what I wish the school was educational just once a week. That's great comment in there. You're in great company, Paul, says Lisa to one of our friends here. I know a few things about a few things. Energy executive here in Canada, so I know a lot about energy commodities and pipelines and companies. Oh, great! That's cool to have another person around like that. Of course, one of the big topics of the year, the world. I mean, it's so related to everything right now. Of course, is crude oil prices, like if you're looking at WTI or Brent or anything, what we've seen on all of that, of course, is this downward trend. And energy is super, super important. Now, people would look at this and they'd say, oh, this is because there's a decline in economic activity. In times when there's economies are booming, oil prices go up because more and more people demand it, because energy becomes intensive. And in that situation where there's a demand outstripping supply, the companies often like to reduce supply to increase price, especially the likes of the Saudis, because their entire economy is dependent on the price of oil. And with oil prices being below $60, Saudi Arabia actually loses money as a country, and it can't afford that because they're living in the gosh darn desert and they don't even have any water. So they really do need their money. And we could chat all about this all day long. We'll talk about oil and energy in the next show, right? How about that? Interesting looking kind of period of looking like there's a double bottom. Folks, in charting, right, when you're looking at technical analysis, when you see something like a clear signal, a clear thing on the charts, like this potential for a double bottom in here, you have to always remember, right, that this becomes a pivot as a result, right? It becomes a pivot as a result. If you look back, though, over the history of oil, I'll go up to the weekly time frame. It's interesting times for oil. I'm getting dragged into a conversation I really did not anticipate having in here. But just this. Oh no, I did the wrong button again. How did I get it back? How did I do it last time? What I'm trying to say there is that we're making a pivot. I've got it back. We're making a pivot to. Is that it? There we go, there's the horizontal line, that's all I wanted to do. There's a pivot here, and as you can see, this pivot, it puts prices into that lower territory, the type of territory which is essentially, when you want to think about it, is before the dot-com boom. So when you were growing up and people used to say 5 pence on the gallon is bad enough for an increase in price of petrol, like they did back in the day, that was during this period of time, back when petrol was cheap, gas was cheap for your car, that whole time. And then if you remember your life kind of changing around 2005 to petrol being expensive, yeah, that's right. And then since then, we've only had these brief kind of moments, and that's not been enough to reflect it on the gas pipe, on your car, filling up your car. Anyway, if oil were to go into a period of price actually in this zone for any extended period of time, as you can see, short burst, inverted head and shoulders, clear technical setup, massive, obvious, incredibly obvious pump up. That was in 2016, by the way. And then this here was COVID. None of this really counts. So doesn't count, doesn't count, doesn't count. If you had anything approaching a trend or even a range inside this box, world changes. So it's nice to have the energy bugs on board with us, of course. Always nice to have the energy bugs on board. You'll probably know all about that. Maybe somebody else got something. So somebody else might have got some value out of that chat, because I'm sure you're familiar with that scenario. Just checking in there, I can see a lot of people are grateful. They've had a good show, and I'm seeing that some people even sent me some tips, like Chimpiang and GL Daisy, Gliz Daisy here today, after I'd done the goal, so that's appreciated. And if I look back at the run up to the goal and everything else, we had Only Shares, Disco Biscuits, 1,000 Years of Darkness, Jay Hunter, Bacon Pancakes, XD, 1,000 Sauce Food Cart, L Baker, Latoya, good to see you, Lisa, and we had the GLS Daisy. To me, that's, by the way, that's Glasgow Daisy. I don't know if that's meant to be. You can tell me sometime if you're from Glasgow or not. And Chimpy Yang that got involved as well. Thanks to Kitties for being a member for 50 months. And thanks to Paul and Marcus and Scony, who became members today, all due to the wonderful work of Lisa, who gifted out 5 memberships to people. Hit that notification bell so you don't miss my episodes, folks. They're really, really good value. Very good, very, very, very good. You should definitely be here for them. And give me a big thumbs up on this video and put your comments down below. I really do appreciate people taking part in the chat box. I should have really pushed that today, because to be honest, I really wanted to see people take part in the chat, really did. And when I look back in the chat there, like for the last hour or something, there's been hardly any messages. I've been talking for 2 hours in today's show. For the last hour, there's been hardly any messages in the chat box. We'd love to see it on the next episodes and stuff if we can chat more, because Google, YouTube will see people talking in the chat box and think more people should be here. But as a members only show, I know that's unrealistic, right? Next time when we're in public, though, if I could ask my members, you guys, to help encourage all of the non-members to chat more and get that chat box going, then that'd be great. I really appreciate everybody for being here, part of what we do. It's different, isn't it? It's different. It's different. And one of the big reasons it's different is because I really appreciate you as an audience. I believe in you so much so I think it's worth sharing, my really important information, my experience, and of course, my hopes with you all. So I've got a lot of hope and belief and faith in all of you, and I'll see you all again in the next episode. Hit that like button.